Hello and welcome everybody to my YouTube channel. For those who have not already subscribed, please subscribe the YouTube channel, and those who want to follow me on Telegram can use the link below and follow me on Telegram. There I share a lot of ideas regarding the stock market. A lot of free webinars are also going on, and all of it. There's a lot of free learning out there, and so much to learn from on Telegram. And today I'm here. Today, this is going to be a weekly technical analysis video with regards to the Indian markets, and we're going to discuss charts which are in regard to the Indian markets. Now, for trading, it is extremely important that you understand the market transitions and you understand it in a way that you can act on it when the market is about to turn, whichever time frame you are trading. Now, recently we have seen a lot of volatility in the markets. The India VIX is close to spiking and went close to the levels when perhaps we had the demonetization, or when we had the budget of this year, early this year. So those are the times, we have seen high volatility, and so we are seeing it now. These are not very extremely friendly environments to trade for traders and typically the newcomers. Okay, so what I'm going to do is I'm going to pull up some charts, discuss what happened in the previous week, and then we're going to see what are the possibilities with certain stocks in the coming fourth week. And this kind of thing we're going to get week by week. For those who want to share this video with their friends, must share it and subscribe to this channel, so that whenever I have my next week's video, it is informed to you automatically. So guys, coming to the markets now, what has happened with the Nifty in the last few days, and what we are going to look forward to in the coming 4 days, right? So in the last week, if you all have seen, I'm just opening my screen. Here we go, and I hope all of you can see my screen now. Yes. So in the last few days, we have seen that perhaps this week could be called that after a fall, there has been a quiet or a calm if we look at the daily charts. However, there has been a lot of intraday volatility. That volatility also invites a lot of opportunities to trade. So you see the average movement on a daily basis, which used to be very, very small, is showing very, very big candles now. That's a very simplistic way of saying it. Since we broke the 10,900 zone and we gapped down, we have seen another rally of selling which has come in, and this rally of selling has shown us immense amount of participation across a lot of stocks. A lot of stocks have fallen along with the index, so there's been a lot of dense participation, and that dense participation does not really call for a lot of positivity. Now, of course, while a lot of traders typically would be looking for the bottoms, the more intelligent and calm thing to do is to take trades as they come. And whenever the bottom has to happen, it is not that just the bottom that you're going to find a good trade. It will also have its own rallies which will come and give you good trades. So don't be in a hurry to find out bottom, because what happens is, I've been receiving a lot of calls lately, and I've been receiving a lot of sort of calls where people are talking about how sad they're feeling about what they've lost in the market. And just to tell you all, the very basis of technical analysis is that the human psychology, right? The mass psychology behaves in a certain way, and because there's a certain kind of behavior which is repetitive, the patterns also are repetitive. Now, if you want to really get to do something in the markets, if you want to really learn something in the markets, you must go and work hard towards it, rather than expecting everything to just come and sort of fall on your lap. Even if you do a little bit, believe me, there is so much potential, and if you do a lot, there is immense potential with even the markets. So those who are trading and do not trade with a particular method, please try and understand, a falling market does not fall because of gravity, and does not go up because there's a lot of bargaining, and therefore people will buy. The falling market is a trend, a rising market is a trend, and every trend in every time frame takes its own time to develop, to espouse in the stronger moves, and to reverse. So if there is a downtrend, as we can see from the hourly chart right now, and we see the downtrend expanding, there was no point of really going long anywhere. And of course, it's not that there were no points here. There were points around here to go long. However, there was not really any point, positionally speaking, to go long. Right now, what happens is that in the process of the falling markets, for those who have taken positions, and they're holding on to it, they feel a lot of pain and they feel a lot of panic, and then the spike moves come in. Please don't do those kind of things, because these are the kind of volatile times which actually chop a lot of traders off. And especially when you're not going with a method, and continuously finding yourself in the long positions, stuck in the long positions, it is going to be very difficult. It is going to be very difficult to stand through these times as a trader, because these times are going to be rough. Okay. And as far as the intraday traders are concerned, and the methodical traders are concerned, and the short-term methodical, even not intraday, all those traders are concerned, yes, the volatility does give you a lot of opportunities. However, it also comes with its fair share of small signals, the wrong signals, the fair share of wider stop losses, because the volatility is wide, the patterns are wide, and stop losses are wide. So you have to take those things in your stride. And there have been some interesting moves recently, and we have seen that after this fall, which has have sort of expanded from here, okay, with a gap down, where all was there an opportunity to add to the short positions and going forward, it has made new lows. Now, in this situation, we have the index has established quite important levels for itself, right? So, a few important levels for itself, which is it's established. Let's just open the 15-minute chart just to kind of split up the price data, since there's a lot of volatility and the range is big enough. We can see that over here there has been a strong resistance zone which has not been taken out. So it did try to attempt breaking out from it, but it could not sustain above it. So safely speaking, here the line is coming to 10,480. Safely speaking, 10,490 level. If that is traded above, then there is some validation of the fact that we are trading above resistance, and therefore we can expect further up moves, right? Because in the last 2 days or so, we did see a lot of buying coming in. We did see that these extreme falls were bought into, and a lot of these stocks which participated actually created very strong legs of movement. And in these situations, of course, the possibility of the market bottoming is never ruled out every time it makes a low, but then it is not really a very very happening situation, because a lot of stocks which actually went up also happened to give up a big part of the gains. Like for example, the stock UBL, okay, it broke out from inverse head and shoulder pattern, which you can see over here, right? It reached about its target, okay, the inverse head and shoulder pattern. So those who are new to technical analysis, they can understand about when I'm going to draw it right now. There is a inverse head and shoulder pattern. Just a second, guys, taking out my pen. Here you go. This you can see as an inverse head and shoulder pattern. Now somebody may come and argue that this is a cup and handle pattern. No problem. Yes, it can be called. I'm just ignoring the lows. I'm just taking it on the line chart basis. Therefore, it comes as an inverse head and shoulder. Either way, the breakout happens over here. When this breakout happens, there is a continuation. There is a throwback on the range, and then a further up move. Now, this entire thing was done with, and generally in case of bottoms, which I see that a lot of stocks don't really just go to the targets and go back down, losing most of their gains. They actually are very strong and mega patterns, which we did not see. One of the picks, which was one of my personal picks also, was on Eicher Motors, which actually, while the Nifty, just to show you again, on a comparative note, Here I have the Nifty 15-minute chart, right? So on a comparative note, you can see on my software that on the last 2 days, okay, while Nifty has come back to the lower area of this range, the lower area of its range, which is around here, as Nifty has done this, Eicher Motors and auto stocks have slightly outperformed. Okay, it's slightly outperformed, you can say, right? So it has not broken out of this range, whereas in case of Eicher, it has broken out of its range. So I'll just expand the chart of Eicher for you all. The Eicher Motors chart, ladies and gentlemen, expanding this chart. Yeah. So you can see how the range is strongly taken out, right? Now it is a very well defined clear range, but for those practitioners of technical analysis will mostly understand what I'm trying to say. That this range and the wave structure it has shown quite some strength. Right? Now again, we have seen drastic falls happen, and markets just don't go up and just don't go down and just don't go fall and just don't rise. So there is a possibility in various stocks and as well as in the index, etc. There is a huge possibility that we do see a lot of movements that may be subdivided. Therefore, a lot of stocks that may underperform. Now, some of the stocks in my radar in the coming fourth week are Oro Pharma. Now, Oro Pharma has been in a sideways range, a well-defined range. It has shown a well-defined range movement, and therefore it attracts me to find that there could be some sort of expansion happening. Now let's look at the daily chart. I always recommend let's start from the daily chart. Right? The daily chart, this is the weekly chart. We can see there is a strong resistance area where it has taken resistance. The daily chart, where we can see again the well-defined resistance area. But also on the daily chart, the structure and the waves look very, very strong to me in terms of these set of waves could be either a climaxing candle, which could end the trend, and also could be very, very strong, going to be a candle which provides a base to the movement. So either way, zone of markets. In this zone, whatever happens will decide which direction can possibly Oro Pharma go to. So Oro Pharma, watch this patch of movement from the daily chart perspective. And if you understand that when the markets are in a range, either the stronger hand and the weaker hands, either the stronger hands are trying to accumulate stocks to push it higher and create, a lot of buying power and rise up the stock prices as well. The weaker hands are in the meantime going short. There's exchange between the stronger and the weaker hand, simplistically put. So in this situation, if there is a distribution going on, then there is a weakness and there is an exchange between the stronger and the weaker hands. Now, understanding it from this perspective, I see that this well-defined range is giving me both higher highs and higher lows. So it is not very, very, very clear which side the direction movement will be. However, safely put, I want to see some more consolidation, and if I don't see some more consolidation, it seems like something drastic and immediate. On the upside, I will only prefer to go long if we are clearly above the 787 to 788 mark, right? If we clearly go above it with powerful moves and good volumes. So those who are doing their homework and do their homework can also do this homework and note this down that above 787 and 770 788, this zone Oro Pharma can show bullish moves, and if that is if you resonate with what analysis I'm talking about. And if those who are not doing their homework can start doing the homework, because it's essential that at the end of the week you look at things from perspective and complete the perspective, because in the trading hours, whatever alternatives you may make around trading may actually play out. Okay, again, on the downside also there is a possibility of the range to go down. However, I will go slow, and on the downside, personally, I would like to let it develop, as I see a very long wick over here, which represents some sort of strength to me, right? So, just for the sake of clarity, in case in case the market provides us with opportunities, the range which I'm looking for on the downside, okay, and I'm personally not going to pick it up that I have to trade it, but if it only moves in a certain way, then. So the range around the downside around 730, 727, 25 zone. If these zones are taken out, I might get some signals on the shorter time frames to go short, right? And the momentum can exaggerate to levels which are going to the next interaction point. So guys, interaction points are very important, because interaction points more often than not are attracted and repelled by the prices. So make a note about interaction point. If you notice, if anybody notices that even in the recent market, in the recent Nifty chart, okay, if I have to take the important points which have actually been there and have shown a lot of promise, then you will notice that these are important points where the market has already defined before. So the market has defined as these points before, and exactly these are the points where market is coming and attracting as well as repelling. Now on the downside, these points are also becoming important and will be naturally important, because there was some huge interaction between buyers and sellers that caused a certain movement. So on the downside, around 200, 10,200 zone, okay, you should look at around 10,200, 150 to 20. See, the range will be wider for this zone because the market is representing, expressing a lot of volatile movements, right? And on the upside, of course, 10,500 is there. But there is a something to be noted. If you look at the daily chart, if you look at the daily chart, if there is an up movement which might espouse, if at all in the coming week or so, please be careful, because in an overall downtrend, okay, in an overall downtrend, we can never really say when the market starts trickling down. So the important resistance areas which we can see are the 2600 area, because on the daily chart, and I'll show it to you how they look on the hourly chart. It has really shown us a lot of support which has been taken around 550 to 600 zone, right? 10,600, 550 zone. So be aware that these could be possible resistance areas. Doesn't mean the market has to go down from it. Could also mean that the market is going to rest over here and then go higher. And it could also mean that it can just create another starting of another low, a wave that makes a lower low later. So we are just kind of weighing the possibilities and the evidences. And once we have the evidences, then and the evidences go stronger on one direction, and then you can generate trading ideas, right? One more stock which I'm going to talk about is Bajaj Finance. So Bajaj Finance could show something very interesting, although I'm not taking it for granted that it will absolutely on Monday or something. But yeah, these areas have been strong resistance areas which Bajaj Finance is revisiting. Now the structure which will be formed over the next few days has not been shown by the market now, is something I cannot comment on right now. However, one must keep this on their radar if they are if they are interested in trading this particular breakout, which I may be looking at correctly. So I'm looking at these zones from 2340 to 2040, this around 10-15% area, to actually play me out something, and then later probably show like the chart giving its ideal aspect, okay, which me and the technically sorted team me and my team have been working on and getting a lot of interesting ideas recently. So we see that on the hourly chart, okay, on the hourly chart, there has been an extremely sort of divergence over here, because see how low it is going and revisiting and not making a lower low in RSI, right? However, in the recent past, what we see is that this may take some time to play out. Okay. So we are happy and we are positive in terms of the fact that if it breaks the resistance, but we are not very sure about if the structure is over. Okay. And why, one more reason one cannot be too sure about things at the moment is because on either direction, in the case of certain volatility which is there, on either direction one may see a movement that may just gap up or gap down very fiercely. So you want to hold your horses and take the bets which are safer. Like for example, one of the trades which I took 2 days back was on Bank Nifty, and this aspect over here. Okay, I took a trade from here, and I've got about 200 points. Right. There was another trade I took over here, which was far bigger. Okay, far bigger as a trade. It was a clear breakout trade. So these are bullish structures and these are bullish base building. However, they are not over yet, especially until the breakout has not come. So we'll have to wait it out. And some phases of the market, when the market behaves in a volatile manner, they eventually turn around into phases where the market mellows down its volatility. So those who are especially option traders must understand that the volatility they are seeing, the volatility they are seeing may not last all the time through the different market phases. So one needs to be understanding of that, and because option players can get affected if there's a drop in volatility, especially those who are standing on the long side. uh, in higher IVs may help you enjoy a lot of good moves, the big moves with the option theta affecting you less and vega affecting you more. But when the IV drop and theta decay starts, a lot of options will drastically lose value. So please be aware of what I'm trying to tell and be vigilant with your trade selection. So if there's a volatility drop and you expect Bank Nifty to go to 28,000, again, you may not get that kind of result on your if you're buying call options. So if you want to really do something excellent time to make spreads, 1:1 spreads, don't go into 1:2. Excellent time to make spreads. A certain strategy which a professional option trader would understand what I'm trying to say, right? So those who are not professional option traders and want to learn about strategies, you can in future join any of our trainings. So I give trainings regarding technical analysis. Technical analysis, a full-fledged course on technical analysis, which is technically sorted, and that course is going to, the next batch will start in November. So those who are interested may contact me directly. I will be sharing my Telegram channel below, and you can follow me and you can contact my team when we make these announcements. We will give you enough links and data to contact us. And one of the stocks which I feel can also be on our radar, right? Uh, if the volatility expands, all these stocks which I'm discussing will show a lot of bullish structure continuation, right? Apollo Hospital, which is trading above its resistance zone at 217. Sorry, Apollo Tires, which is trading above its resistance zone. So Apollo Tires here for you is trading above its resistance zone, right? So it's a 200 rupee stock and it has its own kind of movement, but the patterns which we are seeing are imitating an inverse head and shoulder. I would suggest that if it's rests more and you find shorter time frame patterns over here, you can find something interesting. See, one of the key reasons why I like this is because the area where it has bounced from on the weekly chart. Okay. However, again, markets are volatile, so just keep your chips balanced along with the probabilities. Also, one stock which I have been looking at, again, if volatile movements is found, uh, Titan. Titan. On the weekly chart, there's a strong hammer candle. So this is showing us a level of buying which has come in. Okay, and it has taken that hammer at a very strong support zone. Right, a support zone is there. Right. So keeping that in mind, there is element of strength over here. Again, on the daily chart and the hourly chart, if we look at, there is still a structural development which may cause breakouts, which may happen. So again, Titan is one of the picks I'm looking at also. So guys, if the volatility is continuous and there's a sharp pullback, a lot of stocks may see a lot of strong movements. However, understanding that if the structure of the patterns need to develop a little more, we may see 2-3 days of sideways market and lower markets than the current levels. So be prepared for the market phases to give you different transitions even during the day. Doing all that will help you trade the markets better. And of course, you can contact us for any, if you need any technical training. And we have a 15-session full-fledged course on technical analysis. Those who are joining Telegram, may note that you can follow me on Telegram. The link is given in the description box below. So thank you so much, guys. I'll have another video coming up next week on the coming 4th week. So this was the weekly technical analysis video. I hope you all enjoyed and learned something. Take care, have fun, goodbye, enjoy.